Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Tuesday, February 6, 2018. Hope you had a good trading week. So far, market's tanked. Big day down, as we were kind of looking for here. Here's a look at the ES front month futures contract. This is the daily chart of the broad market in futures form. Proper technical way to look at the market. And boy, did we give back all of January in just a couple of days. It was ugly. Let's go through the major indices on the daily charts. Then we'll look at the intraday action. Then we'll talk about what's coming in the next day or so. So we've got crude oil actually down as well. Remember, there's a 13 sell signal here now, so down $1.92 to 63.52. Gold down $4 and up $4.10. Not a big deal for gold. S&P cash. This is the big deal, right? Down 113.19 points. Yuck! I talked about over the weekend that red static trend line was the first target. We hit that, broke it like it wasn't even there, which is not a positive sign. Next support level is down near the 2,500 level or so. NDX, this is the Nasdaq 100, down 264.37 points. Has not quite gotten to that red static trend line. We'll see if that becomes support when we hit it. That's around 6,400, so another 95 points or so. If we slice through that, well, there's just nothing really to hold us up. SOX, the semiconductor index, was down 62. Biotech's down 155 points. Everything giving back everything from January in a couple of days here. The VIX up 20.16. Remember, 40 is the panic reading on the VIX. So if we get over 40, and when you can spike significantly higher, but a close over 40 is usually the panic reading. But we'll see. I mean, it can go lower. I mean, the market can go lower even after that. So it'll be interesting to see what happens. I think this is definitely going to be an eye-opener for some people. If you're stuck with us for the VXX calls, you're obviously well in the money at this point and doing very well on that trade, making a lot of money. The trend up closes at 3.6. That's a really high reading on the trend. Remember, we had that 0.85 10-day moving average back a couple weeks ago, just under it, and that's a sell signal, and that basically was close to the top. And then we hadn't seen that since over a year ago. And so everything's lining up for exactly what it should be. But this big number here on the trend puts the 10-day moving average at 1.26. Nasdaq volume, 3 billion shares, and that's not an options expiration number, so that is good volume. What's interesting is the advance decline ratio on the Nasdaq is only negative 190. So it's not that bad on the Nasdaq side. The 10-day moving average is negative 290. But if you look on the New York, the advance decline ratio, negative 2431. Again, 2 days in a row with the worst advance decline. That means energy stocks and everything else. It's not just the techs, because the Nasdaq side is the techs that were down. Now, the techs were down, some of the key tech stocks. Let's go through those. Google down 56.81. That's a big 5% loss in Google. Apple down 4.01. That's a big Apple loss. Amazon down 39.95. Remember, this was the key because Amazon's been carrying a lot of the market for a long time here. We had that 13 sell signal on Amazon 4 days ago. Did not break the risk line of that, and now we're coming in. And there's a lot of room to the downside. Remember, Amazon, that static trend line's down there at 1160, which is another 200 and some points lower, 230 points lower. So if that's where Amazon goes, the market's going to be a lot lower with that move. Netflix down $13.17. Tesla down $10.62. TLT, the 20-year bond ETF, was lower and then bounced. It's a big bounce in bonds. We don't usually look at the Dow, but we will for this. Down 1175, over 1,000 points lost on the Dow. Shattered that static trend line like it wasn't even there. Goldman Sachs down 1093. Remember, this stock didn't do much all of last year. It was stuck between like 210 and 230. Started to rise at the back end of the year and into this year, and so we're back almost into that range again already. All right, let's take a look at the intraday action. So here's 5-minute charts. So again, Friday we had a small gap down. We just drifted lower, but here's the move today. We gapped down, we moved up, we exactly filled the gap on the E, and literally that was the top. Rolled over, and then it really wasn't until the afternoon that things started to sort of free fall. Look at the Nasdaq futures. They gapped down, filled the gap. They were actually green for a little bit and then rolled again. But overall, big loss of the markets. Big loss in the markets here over the last week. It's just not pretty at all. All right. So what does that mean? Obviously, it does not mean you should buy stocks tomorrow. We play with the trend, not against it. We're not here to catch a falling safe. That VIX on the move is a big deal. And again, the VIX can go all the way to 60 intraday, maybe for a day or so. Even we've seen that happen before. But certainly the VIX needs to get over 40 before you even start thinking about a bottom. And the problem is if the VIX goes to 60, the S&P might be down at 2,200 by the time that happens. In terms of economic data coming out on Tuesday, we've got the trade balance number an hour before the bell and JOLTS job openings 30 minutes in. Trade balance can be a big number, but more for Forex usually than stocks, so I wouldn't expect it to be the driving factor here. And the rest of the week is pretty much data free. There's not a lot here. So, should be interesting. Again, I think while today was a little awkward because we gapped down, filled the gap, and spent the first 4 hours of the day doing not much until the late day sell off, I think tomorrow could be the more interesting day to make some money on the downside, and we will see how that goes. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Tuesday.